What is going on? Back with another video. Um, Real quick, I'll just go over what I was thinking about for a London session. So we had this 4 hour fair value gap, kind of respected it. Then we had this 5 minute inverse fair value gap, uh, kind of respected it. I don't really use inverse fair value gaps, so I don't know how that worked, to be honest. But it was a fair value gap as well. So price taps into it, disrespects the 4 hour and the 5 minute. So this was, uh, I think I did try entering here, got stopped out for minus 200. Took that loss uh, and waited for the morning session. I did want to see price rally towards the highs, specifically this point in price, but because we didn't do that, I want to draw your attention to the 4 hour time frame, but we're going to remove the drawings and show the long-term drawn liquidity. So on a 4 hour time frame, uh, I've been anticipating that price wants to come down to these lows and seek this liquidity, right? What makes me think that? Well, we've been in a very, very, very trending uptrend, right? So for quite a while in this week, we were ranging. This could be seen as our accumulation, right? Accumulation zone. Then we have elections. We have the turtle soup, sign of manipulation, right? During elections, manipulative uh, economic event. To then where we have swept these highs, also turtle soup, chopped around for the whole week except for Thursday, Friday, where now we are seeing that sell off, right? Completely closing out this expansion that we did last week during elections. So, what could that potentially mean? Well, if we wanted to see higher prices, we would not want to see price uh, sweep this liquidity simply because we're still anticipating that this is a turtle soup and continuing forward. Next week will be Q3. So, for insight, Q3 is typically the easiest time to catch the longest, most profiting trades. Q3 is such a beautiful time to trade because price action is probably the cleanest and easiest to catch. If we're expecting lower prices before, uh, let me stop real quick. If we're expecting higher prices when Trump is in office, potentially before Trump steps into office, we would need to sweep liquidity and gain momentum for us to rally during his presidency. It's important to uh, wait for Sunday and Monday to give us more information on where we're heading for the week. But on a monthly time frame, I'm expecting to sweep October's low and potentially even lower, right? To fill this new, I think this was a new week gap. Or, no, it actually wasn't. It was just this is actually a new day gap. Or, yeah, this is a new day gap. So we could be heading towards this new day gap and seek this liquidity. But that's just on a higher time frame. We won't know more until Monday. Uh, once the session closes. Going back to the entries, right? We took our entry early morning on the 5 minute time frame. Turn this back on. 5 minute time frame. Because we had this idea disrespected, I was no longer bullish, and I switched my thinking to what I just explained now. So, anticipating that we're going to seek liquidity at the very bottom, I'm expecting a pretty hefty move, right? Because it's Friday, the market wants to do as much as it possibly can since it's the end of the week, and because we haven't done much but range the beginning of the week from Monday to Wednesday, price action is going to do something unexpected, right? So we entered off this 5 minute fair value gap before the kill zone, right? It just looked clean in my opinion because we're very bearish. Not a lot of fair value gaps presented, and this is if this is going to be the breakaway, then we definitely want to see this touched into and then completely sell after. So we did get that sale. Uh, Unfortunately, I did stop my position simply because price action was just chopping a lot. Like there was times that it would just shoot, but um, seeing price action just chop, chop, chop is not what I like to see. And in hindsight, this is this might look like, oh, it's going to go down, but you gotta also keep in mind that we're sitting within. Let's go to the 1 hour time frame. We're sitting within these PD arrays, right, where we have lows as liquidity, we have wicks, we have fair value gaps, we have order blocks, we have all these things that could still transfer to this idea of going bullish. So because of those reasons and because of the price actions chopping, I wasn't confident in holding for the entire day, right? Which I should have, but I'm not perfect. My emotions got the best of me and I decided to close my trades. So that's what I did, and then for the afternoon to make that last 1000, I basically just entered off a 1 minute fair value gap and then held for some handles. Basically, following the same logic. If today's Friday, we're definitely going to be chopping down slowly. Looking at previous price action from this point, it just gave me confidence. Hold out for a bit longer and take profit when I feel comfortable. So we eventually just got stopped out. I think we had sold somewhere here, right? And then got stopped out on the way up, trailing my stop loss to here. Uh, it happens, and I'm not mad about it. It was a great recovery for what happened yesterday, or I should say Wednesday. Um, so that's fine with me. Next week we'll come back strong, and it'll be the clean week. To go over what happened exactly Wednesday was on Wednesday night, I traded during London session, holding for the entire night into New York Open. Because I did that at 8:30, we had CPI news. CPI stands for Consumer Price Index. This is what tells us what's going on with the economy and how much are people really spending, right? So prop firms, what they do is they set rules in place and certain requirements for you to meet as a trader and stay consistent with so that you fail. The thing with prop firms is they make money when you fail. They lose money when you win. When you pay out, they're paying you out of their pocket from the losses of other people. When people lose, they get paid. So because of that, they set a lot of strict rules so that you're limited to how much you can make, and uh, making sure you fail more than you win. Unfortunately, I did not read the rules of news trading. I traded news before, but it was on a valuation account, and I never got that alert of being banned. So I never worried about trading or holding through a news event. And there's other people that do trade during those news events. So I didn't realize that until I woke up on Thursday after trading London again and seeing that my account was breached and taken away from me, all profits gone. This was definitely a learning lesson for me to stay focused and read more on my prop firms, to not only stay aware but acknowledge the rules in place that these prop firms are putting. Um, Definitely not upset about it because it was 100% my fault, but it just goes to show you how shady these prop firms are and what amounts they'll go to just for you to lose, right? And you can't, you literally can't be mad at it because they're over here giving you the privilege of playing with fake accounts with fake leverage to make real money based off of your performance. That to me is such a great opportunity, and I'm just blessed that I'm able to uh, be alive at this time when this is functioning. Because if you look back at the 1980s or 1990s, they didn't have this. They were using live funds, their money, to make money. So at that time, it was really hard for people to be profitable. They would call their broker and say, "Hey, buy or sell for me," and next thing you know, they're $1,000 in drawdown, not able to manage their own risk or see their own trades. It's all handled by someone on the phone trying to get money out of your pocket. So this to me is not only one of the greatest opportunities everyone is open to having, but at such an amazing price. Like, yes, I lost the opportunity to get paid out uh, over 10K, but I didn't lose anything. I didn't lose money. To me, that will always be way better than risking my own funds and losing my own funds. So I'm okay with that, and I believe in my craft. So I'm coming back no matter what. Nothing's gonna stop me, and I'm going to rinse my fund of futures for their pockets. Like, it's inevitable. It's going to happen. My advice for people who want to get into this is I'm going to ask you a very important question, and you have to be honest with yourself. If you cannot uh, answer this correctly, then you have to work on yourself before you get into this. And it's very important because you're not versing anyone other than yourself. This chart is always going to be here. It's going to be here for the whole day, for tomorrow, the next week, and the whole year. It's not going anywhere. So there's no need for you to be impatient and get greedy because you're missing out on money. That's not the case. You have to learn to control your emotions, control your greed, and be patient for your setups. Now, the question I'm going to ask you is, when you know you have flaws and you're making mistakes, are you the type of person to let go of your ego and say, "Hey, I'm making a mistake right now. What's my solution to fixing my problem?" And if you're not willing to fix and be accountable for your flaws, then you cannot become a profitable trader. I don't care who you are, you will never be profitable if you cannot fix your own flaws. It's that simple. If you can't fix your flaws and you get upset at yourself too easily and you can't uh, learn to correct yourself, don't trade. Please, you will lose a lot more money than you gain, and you're just going to be upset with yourself even more. Now, for those of you that answered the right way and said, you know what, when I do understand my flaws and my mistakes, I want to be a better person and I fix them. That's great. That's what I want to hear. That's what you need. In this industry, you're versing yourself. No one is telling you uh, what to do, when to enter, when to exit, and how to do this. This is all on yourself. So if you're not comfortable with yourself, your trades will definitely show and your profits will never come to flourish. So my advice for those that are struggling to break that bad habit is read a book called Meditations by Marcus Aurelius. That book will definitely give you some insight on how to not let things get to you and to really stay what most people like to call themselves stoic. Being stoic means you don't allow uh, any outside factors or anything really to move your emotions, right? You're stoic. You think logically. You don't think emotionally, which is kind of what you need to have in trading. You need to think more logically than emotionally. Now, if I'll say this, if you believe that you're really good with your emotions and nothing really gets to you, be humble with yourself. There's a lot of things and a lot of times where you probably got upset or you get sad, and those are key moments you need to understand. Your character falls victim to emotion, which is normal. We're all human. There's nothing wrong with being mad, sad, or happy, but you need to understand when those times happen, because when it comes to trading, whether it's a good reaction or bad reaction, it does transfer to your trading. And if this is what you want to be doing to make money and be your full-time job, it's something you have to be aware of within yourself. Trading will not only make you better financially, but it makes you a better person overall. You learn to really communicate your feelings and emotions and understand yourself better. I think one downside to trading is that I've noticed that I've gained more anxiety. I don't know why that is, but sometimes, or I should say, trading might bring something out of you that you didn't know about. Whatever it may be, don't beat yourself up for it. It's best to just understand what's really going on and do your best to think logically on how to continue moving forward. With my situation, I just lost my 3 funded accounts, right? All pending for a great payout. Now that it's gone, uh, it is upsetting and a bit sad, but that money was never in my pocket, so I'm not too worried about it, and I know I'm capable of making that much more, right? I can make 3 times of that. Yes, it will take time. Yes, it will take patience and persistence, but that's just what trading is. And to me, this is 10 times better than a 9 to 5 job. So I am more than happy to continue uh, grinding at this and moving forward. Some advice I would give for beginners starting off on how to really start understanding how to trade. Watch ICT videos. Watch Romeo's Turtle Soup on CRT as well. And watch a podcast. I want you to write this down because this is a pretty good podcast. Watch a podcast on Trader Daye, Daye, Trader Daye, Quarterly Theory podcast. I believe the podcast the channel is like wisdom or something, words of wisdom. That's a really great video, and it gives you some insight and understanding of how a normal person, just like us, just like you, just like me, went from watching ICT to being a really profitable trader who's making 6 to 7 figures now. All this is free on YouTube. You don't need to pay anyone to be your mentor or pay for any signal service. I really suggest that you learn to do this on your own before you start copying someone, because if you learn from someone else and copy them and then you don't have the opportunity to talk to them ever again, you're never going to be able to understand this on your own, and it will slow you down because you're always going to be looking back to the times when that person showed you something, and when you don't see it or when you do see it, you probably will be wrong because you didn't fully understand what that person was looking at, right? So it's always important to do things on your own. If you're able to work with people, definitely work with people. They will help you, hopefully, and shape your thinking. Trading is a mindset. You have to constantly be in the mind of smart money concepts. You're seeking liquidity and points in the market where people are least expecting price to reach. But price is reaching there for reasons that everyone should already know. Price is going to points in the market to take out orders and submit more orders to gain more profit. Think of trading as a game of cat and mouse. The mouse is price action, right? Price will just randomly run to random corners in the market. It'll either make a high, make a low, make a higher high, or just range and do nothing. The cat is you. You're trying to chase where price is going. If you continue chasing the mouse right behind it, you'll never catch it because the mouse is just too quick. Price action is just moving too quick, and you'll never be able to catch a really nice trade. Majority of traders fall into that game of cat and mouse because they're always chasing something. You don't want to chase. Instead, as you're the cat, what you want to be doing is setting a trap, right? You got that mouse trap with some cheese on it. You're telling the mouse, ooh, this is some really nice cheese. The more times that you plot and plan for price and wait for price to come to your mouse trap, which is your setup, and then you execute on it, more times will you see success and long, strong, profiting trades. That is the goal of trading. To be a sniper cat plotting, placing some traps for the mouse price action to come in, fall into it, and give you some money. If you have questions or you don't understand something or you really don't know where to start, leave a comment or reach out to me on Instagram, and I'll be more than happy to get you started and helping you at no cost. I was blessed by my friend to put me on all of this. So the least that I could do is put more people who are trying to learn to do this uh, on the same exact path that I was on. But that'll be it for the video. I don't want to make this too long. Uh, Next week should be a good week. So far, I'm looking bearish, but we'll have to see how Monday and Sunday reacts. But yeah, stay safe, everyone. Enjoy your weekend, and we'll see you soon.